Welcome, Kitchen Talk family. This is Leanne Moore, and I'm your host on Kitchen Talk. Thank you for joining us today. I want to say we have a wonderful show last week and great guests. We have a great lineup of guests this week. But as I always say, I want to find out how everyone is doing now that the country is reopening. So if you're out there, give me your comments. You can put your comments below. We will post them on the show. This is going to be our interactive show. So let me know who's out there, who's watching today. We want to hear from you. As for myself and a few of the guests, I know Diana does her morning walk. I try to do mine, and it does make me feel a lot better. And I also walk with my mask. So we hope that you all are doing well during the show. As I stated, this is an interactive show. We want your comments and we want to know how you're doing. And like, share, and when this show goes on to YouTube, please subscribe and ring the bell, and so we can send you updates on our show. We have a great show coming up, you guys. So stay with us. Welcome back to Kitchen Talk, everybody. My name is Leanne Moore, and I'm your host today and next Thursday and Thursday after. I'm in real estate in California and Las Vegas. I started this talk show because nobody can see me in my home. So I wanted to make sure that everyone knows that I'm still open for business, as well as a lot of businesses out there. And I'm 24 years in California as a broker with impressive properties, and I'm 14 years in Las Vegas. The Las Vegas market, as well as any other market, I call it the panic pandemic. Pandemic, yeah. And I'll be talking more about real estate when I bring Diana Dykes, our mortgage specialist, on so we can talk more about real estate. But I have coming up my first guest. Her name is Jane Reese Wilkins. She's with Jane Reese Wilkins and Associates. She's going to talk about health insurance. And if you are in California and you are in other states that maybe you've lost your job and they've offered you Cobra. Cobra is very expensive, and she's going to show you and help you with some alternatives to that. So coming up will be Jan Reese Wilkins. Hi, Jane. How are you? How are
Hi,
you?
good morning, Leanne. How are you?
I'm doing good. Thank you. Thank you for coming
I'm
on Kitchen
great.
Talk. So, I
I'm
want to
doing
know
well.
what is going on in the health
Sure.
industry now that a lot of people are losing their jobs. So, what are you able to offer them in terms of health insurance?
Okay. Well, first of all, I wanted to talk about Cover California because I am a Cover California specialist and I also specialize in Medicare. So, Cover California was born out of the Affordable Care Act, aka Obamacare. In California, it's called Cover California. So each state has their own name for covered for the Affordable Care Act, and in California, it's Cover California. Um, Cover California is considered a marketplace in the exchange. If you go out of Cover California and go directly to a carrier to get insurance, that's considered out of the exchange. Okay. So when you come to me and you say, Jane, I would like to get an insurance plan, the first thing I'm going to do is see if you qualify cover. And by the way, is President Obama's plan. The great thing about Cover California is that it gives you a subsidy towards your premium if you qualify for it. So that means it actually helps to pay for a portion of your payment. A tax credit, subsidy, I just like to say payment toward a credit towards your payment. So the first thing I'm going to do is, so for let's say if we have one, if you make $18,000 or under, if you're making $18,000,
Jane, I'm gonna have to
you go
interrupt.
to
I'm gonna have.
Medi-Cal, which
I'm
is
gonna
the
have.
state of California low income insurance. If you make 18,000 or oh,
Your
you,
your
you
internet is
would
going. Your
qualify
internet is
for
going
you
in
would
and out.
possibly qualify for a Covered California plan depending on your income. Okay, so what happens is I have clients that pay as much as $1 a month for a Blue Shield PPO plan. So what I do is I take your information and then I give you a quote, and then it's never we don't know the exact payment until we actually do the application. It's usually maybe $2 or $3 higher or lower. Okay, and then we do the quote and we do the enrollment for free, and we do it online. And so we just need an electronic signature. We don't need to meet with you. So the great thing about Covered California is that it actually pays a portion of your premium if you qualify, which is just huge because insurance is very, very expensive. So right now, where there's so many people that are unemployed, Cover California is the answer to Cobra. Cobra is way too expensive, way too expensive. For example, I had a lady call me and she got laid off from her job, and Cobra was offering her $900 a month for her payment. I was able to get her a Covered California plan for $474 a month. They were subsidizing her $426 because she qualified, because she was on unemployment and she was barely making $2,000 a month. So it's definitely no should be on Cobra. Okay, so that California, I did want to speak a little bit on Medicare because I do Medicare as well. So if you're turning 65 and you need your options, Medicare can be very confusing. So I give you your options. I'm actually certified with 13 plans with Medicare, and I help you navigate through your Medicare years. Medicare has great plans. They offer benefits like transportation, dental, over-the-counter drug allowance, gym memberships, etc. Okay, so that is what I offer for Medicare. And if you're under 65 on Medicare, you're probably totally disabled. So I can also assist you with getting a plan for that too. Any questions?
Thanks, Jan. Your sound was going in and out, so we kind of heard what you were saying. But the flyer was up, so perhaps people were able to read the flyer to see more of what you're speaking about. So sorry, we had bad somewhere in there. We had bad internet. I don't know if it's yours or our system, but perhaps we can have you back again so we can get a better idea of what you were saying about the insurance. But I do have the flyer. We will post that on our website and also on our Facebook page. Okay? All right. Thanks, Jane. All right, everybody. If you're still with us, welcome to Kitchen Talk. Please like, share, and also when we go to replay, to subscribe and ring that bell. That was Jane Reese Wilkins with Jane Reese Wilkins and Associates with Cover California Insurance. If you want more information on that, you can contact me. We will have our information on the website and also on Facebook. Now we have coming up is a dear friend of mine. She's with Old Republic Title, and she is my title rep in Southern California. Actually, the best title rep in Southern California. And she's going to talk about property tax relief on replacement dwellings for seniors. So, all of you young seniors out there, this is some great information. We will have some other items on the show about reverse mortgage, and Jeffrey's probably going to talk about financial planning that relates to the young seniors. So I have coming up next will be Lucy Crapman with Old Republic Title. Hi, Lucy. How are
Good
you?
morning, everyone. Thank you, Leanne, for having me.
Yes, I'm glad you were
I wanted to
able to.
talk a little bit about. Hi, can you hear me okay? Yes, hi. I'm Lucy Kratman with Old Republic Title, and I'm talking to you about Prop 6090 this morning. It's a state tax initiative that provides tax relief for seniors when they are downsizing or perhaps just moving closer to family who's moved away. Prop 60 allows you to take your tax base from your current home to a new property of equal or lesser value within the same county. Now, if you wanted to move to another county, there are a number of counties in the state that have adopted the measure, and it's on a county by county basis, but you would use Prop 90, which is the inter-county proposition that allows you to take this tax base with you. There are some requirements. The first requirement is that either the property owner or the spouse must be 55 years or older. This is an incentive for seniors, and it also helps with the issue that we have in particularly Southern California, where our inventory is always low. So we keep the properties kind of moving this way. The second requirement would be that the replacement property, being either a new purchase or a construction, has to be acquired within 2 years of the sale of the original residence. The other thing that the property that you are selling has to qualify to be reassessed, meaning you can't just transfer this property to your children. There has to be a sale involved. And it's got to be equal or less market value. So it can't just be, you sold it to your brother for half of what you would have gotten from someone else had it gone to market. As far as who would be eligible, again, it would be a homeowner whose property is a primary residence, or a disabled veteran that has an extension. This is a once in a lifetime. You can use this proposition initiative once. You can't continue to properties. You can't just buy a property and flip it and continue to try to get the tax base transferred. Again, it's a one-time per couple, per married couple. So if your husband sold a property that was in his name, that involves you as well. We're in a community state here in California. So you wouldn't be able to use this property initiative again. The other thing is that once this has been granted to you, you will need to complete a PCOR, which is a questionnaire given to you when you are purchasing your transfer property, and this is where you would give all your social security information and all the information for what you're doing with the property. You can specify there that you're doing a tax transfer, but then whether you're remaining in the same county or going cross county, you claim that exemption the county that the new property is in. I know that in Orange County here in California, in Southern California, there's a 3-year period where you can apply for that exemption. And it's huge. Savings is huge. I'll just give you an example. Say you bought a home in the lease for $100,000 and you're $1,200 property taxes a year. And you decide that you're gonna, that's now worth $1.3 million, and you're gonna go buy a house in Orange that is $1 million. Something like that, you'd be paying $12,000-$13,000. But because you were paying $1,200 on your original house that you're selling, you would take that tax basis and would continue to pay that amount of tax at your new property. This is a great opportunity to have your grandparents moving closer. Now, in the COVID, where we can't really see our grandparents, you could at least, if you had them close by, drive by, wave at them. But if grandparents are in LA County and you've moved to Ventura or Orange County, that's going to be very difficult to do. Thank you, and I'm going to be sending some notes to Leanne that she can also pass along.
Well, great. Thank you, Lucy. And so, of course, if there are any young seniors out there that probably in need to sell their home, I will be the person to assist you. And of course, Lucy, my account rep with Old Republic Title will be the account executive for the transaction. Thank you, Lucy, for this information. I know we work together on a lot of things, and you have a
Thank you,
lot of great
Leanne.
information. Also, I want to tell everyone out there that if you have not checked your title, meaning there's a lot of title theft. You might have seen some advertisements of people telling you to check your title. You want to make sure that your name is still on title. There are a lot of people been in their homes 50, 60 years, never have done any transactions, probably paid off, and they have not checked their title. I am able to do that in the state of Nevada and California. If you do want to, if you're out of state and you want to check your title, contact me. I can refer you to someone else in your state that can assist you. That's very important. So, Lucy, thank you so much for taking that call and answering it and said, I'll be there. I
Thank you,
really
Leanne.
appreciate you coming on. Okay. Thank you so much. Thank you. All right,
My
everybody. If
pleasure.
you are out there
Bye-bye.
and you have any comments, we do have a couple of comments. Let me get her back here. And we have our friend Sabrina is actually saying great information provided today by all of the guests. Hello, Sabrina. Sabrina is with our natural hazard disclosure.
Hi,
I have a
Sabrina.
great team. I have a great team in California, and I have a wonderful team in Nevada. So this is my team for my natural hazard disclosure and my title company. Thank you, Sabrina, for coming on. And another person is a friend of mine says, "Hey, Leanne, hello, Isaac. Thank you for coming on the show." And again, if you have any comments, or questions for any of the guests, this is the time to put them in the comment section. The guests will be here for the duration of the show, so we want you to give your questions so we can have them answer while we have them here. So please like, share, and when this goes to video, subscribe and ring that bell so we can show you what's coming up for the next show. Next, we have coming up the dynamic Diana Dykes, okay, our mortgage specialist. And we're going to bring her into the kitchen. And she's going to talk to us about the mortgage industry, okay? What's happening?
Good morning. Good
Yes.
morning.
Hello, Miss Lady Diana. How are you?
Good morning. Good morning. Grab a pen, tell a friend. This is going to be some great
Right.
information this morning. Let's get vibrant
That's
this
right.
morning. Vibrant. You know, I did my 4 mile walk, boy. Um, it's good to get up and be positive because there's so many changes going on in our world right now. People are still dying. The borders are still shut down. I'm getting texts. I'm getting all these messages about people are just in a depressed
Yes.
mode. This show is going to put you happy. We're going to get happy. We're going to pray and we're going to get happy. The change is you still have to have a roof over your head. Okay. A lot of the landlords now, because people are not paying their rents, are in trouble. The landlords, if you're still
Yes.
working, okay, if you're still working, pay your rent. If you're still working, pay your mortgage. We're going to talk about forbearance. We're going to talk about reverse mortgage. Forbearance is all over the map. Okay. I got a call. I'll tell you about, I like live scenarios on forbearance. Basically, it is not a forgivable loan. You still have to pay this back. Either the lender, it depends what lender you're going to be with. What is forbearance? Forbearance is a lender calls you up and says, oh, we'll put you in forbearance. Hell yeah, no problem. Like giving candy out to a 6-year-old in the candy store. All right. So what happens is it goes into forbearance 3 months, sometimes 4 months. Either in that fourth month, it depends on your lender, you have to pay all that back in that fourth month. Okay. So you have to come up with that bulk of money. Or they're going to give you a certain amount of time to pay it off. The only thing that is not going down, please grab a pen, tell a friend. Values are not going down. Rates are going down. This is not a mortgage crisis. Is this a great time to buy? Yeah, call Leanne right after the show and then get pre-qualified.
Right.
Leanne will help you out. She finds those diamonds in the rough and we can help you out. This is not a mortgage crisis. This is a world pandemic, okay? What's going down, not values, rates are going down. So that being said, if you're in a forbearance and a lender looks it up, it doesn't go on your credit, or it may, things change every day now. But what happens is the lender looks it up on Fraud Guard. They can tell everything, your fingerprints, where you've been, who you've been, if you have any criminal records, and if you're in forbearance. And when they see it, they stop it. And then you have to pay. Now the rule is with FHA and you have to pay 3 months in a row in order to get a purchase, another purchase, or in order to get a refinance. So forbearance isn't the way if you don't need it. If you need it, you're out of work, do it. But remember, when you go to refi, because they're telling you, oh, it's not going to affect your credit, even the person you have in forbearance with your lender and you try to refi with them, you're going to have to pay 3 months in a row payments to catch up to show that you've paid all that back and forbearance, and you're going to get a higher rate. So a lot of lenders are not educating. They're not educating. All they're doing is throwing a forbearance on there and just slap it on there like, whoa, yeah, we'll get you out of trouble, but it's putting you more in trouble. If you need more information, you can give Lady D a call at 702-208-6381. Is this a time to buy? Heck yeah. We're getting purchases done and people are giving away that candy. Closing costs, okay? Sellers are wanting to sell now, so get on it. Don't wait. Get pre-qualified. You can call myself and my team and I will get you pre-qualified. Are things different? Yes. Example, especially in California where you could put only 5% down on a jumbo loan and get a very good rate with no MI. Those programs are on hold. So we're doing what's called high balance mortgages with mortgage insurance. So you do have to pay the mortgage insurance on FHA and conventional. Right now, Jenny Mae, FHA conventional. Conventional is a conventional loan to where you have to have a 620 FICO and above. On any of the down payment programs, you have to have 640 or 680 and above. We still do have some of the down payment programs in California and also in Las Vegas. And FHA is a little bit more lenient on guidelines. You can go a little bit higher on the back end ratio. And you know, you're qualified on that, but please be careful on forbearance. Yes. We're going to talk about reverse mortgage. We're going to talk about our senior citizens since that's been kind of the show today. What is a reverse mortgage? I know when I turn 62, I want one. I'm going to put my house in one. Sure, my kids are going to be my beneficiaries. They're going to say, a lot of people say, well, a reverse mortgage, no, I don't want it. I don't want nothing to do with it. If you're 62 and you have a wife that's 30 or a husband that's 30, yes, that does happen today, now. So it just depends. One person in the household has to be 62. A reverse mortgage helps you out. What it does, it qualifies you. You have to have about 40% equity in your home. I have a reverse mortgage specialist I work with, Michelle Keller, and what happens is she will do a diagram and we'll do a synopsis of what you can get out of it. If you have 50%, for example, we are doing a reverse mortgage for a gentleman. His wife passed away in January, and what happened is that he's like he's just lonely. He's like, I'm going to sell my house. I don't want to sell my house. What is this? I need money. We took him. He has over $250,000 equity. He's going to get $20,000 now. We're going to put him in a reverse mortgage. He never has to pay a payment for life. Next year, he's going to get another $36,000. This is tax free. Okay. And so he'll get $36,000. He never has to pay a mortgage in life as long as you have equity in your home. Okay, 62, I'm telling you, call us up. This is an excellent way to live life, especially now. Getting a lot of calls through COVID because senior citizens 62 want to start enjoying their life a little bit more. You could pay for your insurance, you could pay for, medical bills, things like that, not have to have a payment. I put my own mother in a reverse mortgage. Her $700 Social Security a month was not going to cover her bills. So basically 62, you have to have at least 40 to 50% equity. Some decent credit. We're not, basing it on credit. It's based on equity. We will analyze that. You could get cash out if there's enough equity and tax-free. Then you don't have a payment for life. Well, then, Diana, what do you pay? Good question. You pay your taxes and you pay your fire insurance in your HOA. But that's still what, a couple hundred a month versus $2,300 a month that you don't have to pay and you're getting money up front. if you qualify. What you have to do, you have to take a counseling session first, and that's about an hour long. The counselor's over the phone, and they go over all the details. You give us a call first. We tell you what you can qualify for. All right, the reverse mortgage specialist and my team, we tell you how much you can qualify for. Once you're qualified, then the counseling gets on the line for an hour, okay? This is an excellent way to live life. I'm putting a reverse mortgage in my house as I turn 62. I cannot wait. Oh, but then my children, what happens? This is a legacy I want to leave. You leave a beneficiary. You leave it to your children, whoever you want to leave it to, your lover, your friend. Your beneficiary will have 90 days. Upon your death, your beneficiary will have 90 days to refinance it in their name or to sell it, okay? Now that gentleman where his wife just passed away said, oh, I'll just sell my house. I don't know if I should do the reverse. And you have capital gains. You have to do so much with your money. And if you're thinking about going to California from Las Vegas, it's going to be very expensive, and you're going to have to put a down payment. That little bit of 200,000 will go like that, okay? Believe me, when you're living like that. Please be cautious. This is great. Again, the bank does not want your house. After you pass away, that reverse mortgage goes to your beneficiaries, but you get to live. This is what a reverse mortgage is. There's no gimmicks. There's no like trying to get you, catch you. This is basically giving you room to live. We're doing many. Especially COVID-19, there's a lot of people with equity in their home now. Use it now while the values are still there, okay? We don't know what's going to happen. This is not a mortgage crisis. This is a pandemic crisis. So grab a pen, tell a friend. We talked about forbearance. Be cautious on forbearance. There's a lot of changes daily, and we'll be giving you updates on forbearance because that's the big buzzword right now, forbearance. It's not as healthy as you think. If you're working, don't go into forbearance, okay? If you're working and you're renting, why? You're paying 100% in mortgage. Did you hear me? 100% in interest rate. Call us. We'll get you pre-qualified. Leanne, I'll get you in a house. She's approved real estate agent in California and Las Vegas. And then we talk reverse mortgages. So one person in the house has to be 62. Okay. So I get a lot of questions on that, but these are good facts. I mean, I'm telling you, 62, my house is going in a reverse mortgage.
I know quite a few people that have reverse mortgages, and they're living really nicely. Yeah. Now, what I do say about that, if you want to leave something to your children are going to have to make sure that they can get pre-qualified. Call Diana now. Make sure that's what this show is all about. My tip about get my credit straight, it all ties in to be able to get a loan, because if you have children, God forbid something happens to you, the bank is going to call in that reverse mortgage. So is it 190 days, Diana? Something like that?
It's about 190 days. They give you 190 days, and some people think they can't find out. They will find out.
And so
they will
then your children will have to get refinanced if they want to try to keep that house. If not,
because you don't want, Leanne, we had a situation where they came to us. It was a little bit too late. The reverse mortgage, they kept living their life. The HOA foreclosed on their house. Okay, because they did not take action. COVID has become either you are not buried with your head in the sand and you've done exciting things. I know I have. I've changed some things in my life, I've always had a lot of energy. I always look for something to do and get into it. Leanne, you're the same way. I love educating. I'm a mortgage educator. I like to educate the community about what is going on. And, a friend of mine, Vanessa, she is a real estate agent too. She put on a cute sign on Facebook. Instead of buying Gucci, let's buy assets. Let's buy houses. Let's buy investments. Your house. We're refinancing people 3 and 4 times. They're taking 30,000 out now. They're still working, but one person's working and they get to use some of that equity. And they're buying second homes. You buy a second home with Leanne, turn it into Airbnb. Let's not just sit back and watch TV and get.
What I want to talk about next is everything you need to know about iBuyers, and I'm going to keep you on, Diana, because this has been an ongoing issue. A lot of homeowners are getting these mailers, they're getting phone calls. You see the ads on TV about, I will buy your home for cash. You don't have to pay commission. You don't have to do anything. Well, iBuyers are investors. They are investors. They could be groups of investors or hundreds of investors together. They're looking for homes that they can buy little or nothing. Now, I work with a lot of investors. Matter of fact, I have properties that I will call those past investors because they have done right by my past clients. They have paid either at asking or over asking, and not necessarily ask for the termite, all the little Mickey Mouse repairs that might have to be done. So there are some good investors out there. But the problem is when you get these notices, and they have cute notices, they spend a lot of money, they put the picture of your house on it, and you call them and they'll come by and they'll sit, or they'll just they have an algorithm that they price your home by, meaning that they just go basically what the market and what pretty much what they might have to do on the home, and they'll offer you that price. But they also charge between 7 and 12%. Okay, so that means they offer you per se 800,000 for your home. They're going to want an additional 12% fee, and you still are paying the commission for that agent. And if you're not represented, listen to me, if you're not represented, they will be happy to represent you as the listing agent and the representing the buyer. Okay. So please be careful. I always say this when I sell new homes in California and in Nevada: you wouldn't go to court without your lawyer. Don't go to court. Don't go buy a property, new or resale, without your broker, me. So
Exactly, without a real estate
that's
agent.
right.
Absolutely.
So keep that in mind. I might cover that a little more in some other shows, but just keep that in mind that when an investor comes to you, call a realtor, call a broker, so you're represented and you understand the fine lines of buying investment property. Now, again, I work with a lot of investors that are very fair, and it's just the negotiation and know how to negotiate. And a realtor, broker will be able to do that for you. So, okay, Diana. Well, we will continue this another day. As always, thank you for being on the Kitchen Talk.
Sure.
And we will, if we have any questions for Diana, please put your comments below, share, like, and again, when this goes to YouTube, subscribe and ring the bell. I thank everybody for joining us. Diana, thank you. We'll keep you in the green room. All right. All right, everybody. So we have coming up my dear friend Jeffrey. He is our financial advisor with 2020 Financial Advisors. And he's going to come up and he's going to talk to you. He did a great show last week, talking about the financial situation of the country and what people should be doing with their money. And he's going to come up today. And please, if you have comments, we love comments. Okay, this is an interactive show. If you have these questions, let's get the questions in now while we have our guest here ready to respond. So Jeffrey's going to come up and talk about what's going on. Jeffrey, how are you?
I'm doing well. Good morning, everyone.
Good. So I mean, the last week when we had our show, The virus cases have now increased. We've had some deaths that has increased, but the country is opening up. Pretty much everything. California is a little slow. I saw on TV today that Nevada Strip is not open, but the workers are going to get tested. And it sounds like I think June 1st, they will probably, the casinos probably will be open. So, how does that mean for our money? Okay.
Yeah, so I was on a conference call yesterday that my firm did, which had a very well-known economist on, and who was talking about the economy. He said a couple interesting things, some of which I've already been talking to my clients about, but some things that were kind of a new way to put the information on what's going on. And I guess as a reminder, everybody's concerned, if they have investments, they're concerned about the stock market being down, and it is down from where it was in February. But just to remind everybody, you only lose money on an investment when you sell at a loss. So even if you sold at a lower gain than what you might have had previously, it's still not a loss. Kind of the same thing in real estate. Just because your house was worth X number of dollars at some point in time, if you sell it later at a lower price, it doesn't mean you lost money unless you bought it at a lower price. But with the stock market number one is a leading indicator, and that's the thing that you have to recognize is that investors are expecting things to get better. That's why we're off of the trough that we hit in March significantly already, and the market has stabilized and continued somewhat of an upward trend. But the bottom line is when something trades in the market, it's trading at the anticipated value of all future cash payments on that. So if you're talking about a bond or you're talking about a stock, it's what is not only what is the company doing this year, but what is the company or what is the investment doing all years in the future to perpetuity. So bottom line is when you're investing, it's a long-term investment, and you should keep your eye on the horizon. A couple of things that we hit on earlier that I just kind of want to reiterate a little bit. Number one, the discussion of COBRA insurance versus getting out on the exchange and getting health insurance through the exchange. Extremely important. As a financial advisor, one of the main things that I stress to all of my clients is never a good time to not have health insurance. Not having health insurance and getting ill, like if you had COVID and ended up in an ICU, that could be catastrophic to you financially if you did not have health insurance to cover that. So always recommend to people that you have health insurance. And one of the other pieces that was very briefly mentioned was about Medicare and Medicare supplements, whether it be a Medigap or Medicare Advantage plan. If you're retiring and you're going on Social Security and Medicare, you have to have a supplementary plan. Medicare is not a complete insurance plan. Number one, on inpatient services, it only covers 80% of costs. So if you don't have that supplementary policy and you went to the hospital, then you could be paying for 20% of it. On outpatient services, Medicare's compensation is so poor that most doctors won't take it. So if you don't have a supplementary plan, you might not find a doctor that's even willing to see you. So, and just as a reminder, just because you were healthy for the first 65 years of your life does not mean you're going to be healthy for the next 5, 10, or 15 or 20 years. As you get older, your utilization of healthcare increases, your expenses increase, and you definitely have to make sure that you have adequate insurance to cover that in the event that it does happen. Diana talked about reverse mortgage, and we also had a little bit of a talk about a new state law in California that allows you to take the cost basis of your home and transfer it to another property. Now, the important thing about that is if you have a property that, let's say, you bought for $65,000 in 1974 in Los Angeles, that's now worth $1.2 million. When you sell it, your cost basis is going to create a lot of capital gains, and that could be a taxable event. So that's what they're talking about is the control of the taxes as you downsize. If you need to move into another state to be near your children, you need to move to a different part of the state, or quite frankly, just need to downsize to a smaller home that's easier to maintain, or a home that's in a retirement community where you don't have the maintenance to have to worry about on the outside of the building or whatever. The bottom line is that when you do make these decisions, you have to think very carefully about the financial ramifications to include taxation. So extremely important to think about, to talk to financial professionals. And one thing that I have to remind individuals who may have handled their finances all of their adult lives and never worked with a financial professional. You are number one more likely to make mistakes and have poor judgment on your finances. As you get older, you start to lose your mental capacity over time. You can make mistakes, you can do things that shouldn't be done that any professional advisor would have advised you not to do, number one. And number two, when we're talking about couples where you have a husband and a wife, and one of those people has always handled the finances throughout their entire time together, and it's generally the husband, not always, but most of the time. But when the husband dies and the wife outlives the husband by 10 or 15 years and has never handled money her entire life, if that husband has not been working with an advisor, since someone that the wife can depend on when the husband passes, then he's putting the wife in a very bad situation where she can be taken advantage of, she can make bad mistakes, she might not even know where the money is. So you have to think about these things. Estate planning becomes very important the older you get. I would say it's important the day you have a child, because you need to have a will that includes a child care plan. But as you get older and you're in retirement, if you live in California, you should certainly be doing estate planning. I was talking to a California probate attorney just last week for a client of mine that I have an issue we're trying to get taken care of. She was telling me the average probate time in California probate court right now is 2 years, and that was before COVID. COVID has shut down the entire court system for what, going on 3 months now? So imagine the backlog, 2 years, 3 months, 2 years, 6 months, okay? If you die without a will in California, if you have a piece of property, if you have accounts, if you have anything, it has to go through the courts, and the attorney's fees can be as high as 60% for a full probate case that goes all the way through $60,000. That's a very significant expense for a lot of people, and your children might be the ones that have to pay for it until they can get to a distribution and a liquidity event through California probate court. So the good idea to sit down with a lawyer, to sit down with a financial advisor and talk about these things, go through your accounts, make sure beneficiaries are set up, go and review your insurance policies, make sure that your beneficiaries are correct. Review your will. If you have a will that's 15 or 20 years old, more than likely you might have left some money to someone that isn't even alive anymore in that will, or you may talk about property that you don't own anymore in that will. So it might be time to update the will. So as well as, your relationship with your child or one of your kids may have changed to the point that you have a different idea on how you want your money distributed or how you want it handled after distribution. So there's a lot of things you have to think about. You really should talk to professional financial advisors and take a look at your situation if you don't work with one already, because there's a lot of costly mistakes that can be avoided when you go to a professional, whether it's a CPA, financial advisor, or an attorney, depending on what you're having to deal with. Deal with professionals. And I like to advise my clients. I have a master's degree in finance and I work in finance professionally, and I still pay a CPA to do my taxes. So there are some things that are so complex these days that you're better off dealing with a professional to make sure that you get the right advice, that you're adhering appropriately to federal and state laws, and that you're making sound decisions. So just like to kind of put that out there and just talk about, and there's one other thing that I do want to mention. Long-term care insurance is something that people need to talk about. They need to think about. A lot of people think that Medicare covers for long-term care. It does not. Medicare will only cover for up to 90 days in a rehab center after a hospitalization, but that's not long-term care. That's not a permanent solution. Many people rely on the state, which goes to Medicaid. If you apply through Medicaid for long-term care, they're going to dig into your finances and they're going to make sure you spend down every dollar down to $2,000 to cover your own costs of long-term care before the state's going to come in. And when you have a situation where you have a husband and wife, or a husband and a husband, or a wife and wife, whatever, it doesn't matter. When you have two people who are partnered together, they're life partners, and they're anticipating, somebody's going to die first. It's just the fact of the matter. So if one person dies and the other person's going to live 10, 15 years longer, like they frequently do, if all of the assets were burned up for long-term care and the first person that got sick first, it's going to leave the surviving spouse in a very bad situation. So again, this is appropriate means to talk about long-term care, whether you get insurance or you get an annuity with a long-term care and a rider on it that has benefits for long-term care. Also to shield your assets, whether you're talking about dealing with a trust and putting property in trust, or dealing with other ways that you can deal with your assets, both to protect yourself as well as to provide yourself the benefit that you need when you do need it. So these are all important factors people need to talk and think about. And a lot of people, when they get up to age 60, 65, they're feeling super healthy, they're good, that, everything's been good for them. This has never been an issue for them before. Well, there's a big difference between 35 and 45 and 75 and 85, because these issues are coming hard and fast when you get older, and you need to have made decisions about it when you were younger. So it's always a good time to meet with a professional and talk about these types of issues.
Jeff, that was great information. Can you hear me? I'm so
Yep.
used to muting myself. Sorry. That was perfect, because we had planned on having our probate attorney here this week, and due to schedule, we weren't able to do it. But this is what we needed to touch on, because you have your probate attorney, and then you have to have a financial advisor. I've done many probates. Sadly, I knew half of the families, but to see what goes on, I mean, literally, there's big. I'm not. I mean, I'm being sensitive about it. Arguments before I even close the house. They don't even have the money. Okay.
Yeah.
If you get a living trust, that will eliminate all of that. I've heard some of the parents say, "Oh, that's okay. They'll deal with it. They'll be all right." No, you need to have a living trust so you can put your wishes on in writing, and whatever you want to do about your investments. When you have investments, you have stocks. That's when you need to have a financial advisor along with the CPA and your attorney. Okay. Don't always have your attorney do the probate, the CPA, and the financial advisor. No, you need to have those each category with the professionals to handle that, and me as your a broker. But
And
Jeff,
the one thing,
great
the one thing
information.
I like to say
Mhm.
about families is that if someone knows that they're going to be distributing millions of dollars, and it does happen, and they know that their children or the next generation are somewhat irresponsible or have never had that kind of money before, sometimes it's good to, I have worked with multiple generations in the same family in such cases, because a financial advisor you can pay a financial advisor to work with your son or daughter or with your grandkids. And even though they may not have money, they can sit with them, make sure that they're living on a budget, make sure that they're starting to have insurance, make sure that they're making the right decisions financially, so that when a distribution event does happen after death, or even before death, if you choose, that maybe when they get the money, they're going to treat it properly. Because there's a kind of a joke or saying in my profession that nothing moves faster than inherited money, because
That's
frequently
right.
people inherit money, and
That's
even
right.
though the generation that earned it spent a lifetime saving it and investing it, and then the next generation receives it and utterly blows it almost
That's
instantaneously.
right.
So,
Well, Jeff, I
you
want to
know,
thank you. I mean, this is exciting. Thanks to all my guests. We're kind of running short on time because we have some great information. I would love to have this team back again, but I want to make sure that you all contact Jeff. His number is 503-901-0115. And please reach out to him. As you can see, he's very knowledgeable. If you have any finances that you need to um, to have discuss about, please give Jeffrey a call. Thanks, Jeff. All right,
Thank you.
everybody. Thank you. We're almost ending the show, but I want to thank all my viewers. Sabrina, thank you for coming through. We had a message from Miss Gwendolyn Brown. Thank you for the hanging in there with us, and I'm glad you like the information. This show, we want to provide great information. Next week, we're going to have a great show. We're going to have the business life coach guru, Mia Reddick. If you don't know her, look her up on Facebook, follow her. She's exciting, she's dynamic. We're going to have Don Moore. She is a marketing and branding specialist. And we're going to have a surprise small business. So we're about promoting the small business. So all of you are at home that need to get your business in order, don't miss that show next week. Don't miss the show. Now, as promised, real quickly, get your credit straight, okay? That tip number 2. Once you all have received your credit report from annual credit report of last week, hopefully you've done that and you've received your reports. Once you've received your report, you want to sit down, you want to take note and go through each line to make sure all of the items are yours. It could be someone else's. And you want to look for inaccuracies. You want to look, not your account, wrong name, you paid the account. Account has been on credit report for over 10 years, 7 years, and just to name a few. So you need to check for inaccuracies, sorry, and contact the businesses directly. You can also dispute them on the annual credit report, or you can go through your creditor and dispute these items. Everybody, all my guests, I want to thank you for joining the show. We got another Nikki Cadell. Hi, how you doing, Nikki? Thank you for joining. Next week, you guys, come back to Kitchen Talk. I'm your host, Leanne Moore, and we want to thank you and God bless you. Stay safe. Wear your mask, okay? Wear your mask. Thank you, everybody. Thank you.